All right, let's now welcome Dr. Azar, Jammine, the Director and Chief Economist at Econometrix, to look ahead into, of course, the budget speech that is set to be tabled this upcoming week. Doctor, thank you so much for your time today. Very good afternoon to you. So what should we expect from the upcoming budget speech? I would suppose, of course, the key priorities and focus should at least be revenue, stability, as well as administrative efficiency and targeted economic stimulus. Welcome.
Yeah, good afternoon to you. I think you've summarized what the budget is likely to incorporate. I think it's important to state that the most positive thing about this forthcoming budget is that the environment in which it is being tabled is probably the most positive environment we've had in almost a decade. A number of factors have worked in favor of the Minister of Finance producing this budget, the most important being one that is not being highlighted all that much at the moment, and that is the potential tremendous bonanza that the country might enjoy in the coming year as a result of the sharp escalation in the prices of gold, platinum, palladium, and rhodium, which stand to increase the total capital inflows into the country by around 300 billion rand, if only current prices are maintained. If they go even higher, then of course the bonanza will be even greater. But if one translates that into potential government revenue from taxation on mining profits, we're talking about a figure of around 50 billion rand in extra revenue that the government might achieve. And on top of that, we've also had news that SARS has been very successful in raising more revenue than had been budgeted for. So for once, we are not sitting in quite the tight rope that we have had to endure in the past. And that in turn means that the government will not be obliged to increase tax rates of one sort or another, be it increased VAT or increased personal tax by means of bracket creep. On the contrary, I think this budget will offer the government an opportunity to, for a change for the first time in 3-4 years, actually adjust income tax thresholds so that people don't end up paying a higher rate of tax than they were doing a year earlier, which has, of course, weighed down on the ability of the economy to grow and people to spend. So that is very, very important. It goes without saying that the government, in line with the tenets of the State of the Nation address, will be focusing a lot on moving its expenditure towards infrastructural investment plans. The only problem with that is that in the past, we have noticed that there's been criticism that we have not seen the full benefits of those projects that have been planned actually manifesting themselves because of a host of other factors, such as higher crime levels, inefficiencies in the public sector, and the like.
Thank you for addressing those issues, Doctor. I mean, look, one hopes that, of course, the gains made in the country being removed off the grey list and at least some sign of improving bond market and a strengthening rand, especially at the back of the U.S. tariff Supreme Court ruling. These gains, however, mean nothing if, of course, a speech doesn't substantially address concerns of both businesses as well as households that are currently seeking more clarity on debt consolidation plans and potential tax changes, including your VAT and personal income tax. I know you touched on it a little bit in your previous answer.
Yes, absolutely. And that's why I'm trying to paint a more encouraging picture for Wednesday. I think that we are not going to see further tightening of the purse strings to make it more difficult for people to get by. It would be dangerous for the government to give away too much either, but at least it won't need to tighten up the way it has wanted to do in the past in order to accommodate its increased expenditures. And I'm so glad that you highlighted one aspect that I didn't cover, and that is the lifting of the grey listing, the commitment to fiscal discipline, the upgrading of our credit rating by Standard & Poor's Global, all of which have contributed towards a strengthening of the rand and much lower inflation than we had anticipated. And together with that, scope for short-term interest rates to decline further. But most importantly for the fiscus, long-term interest rates have fallen by some 3% in the past year. And that entails a further saving in terms of expenditure on paying interest on government debt, which of the order of 30-40 billion rand. So again, that works towards providing a little more space for the government to do the right thing. And doing the right thing, one of the things that has been demanded by the IMF is to work towards reducing the public debt levels far more than we had anticipated. The fear has been of an escalation in South Africa's public debt, but in fact, given the bonanza of tax revenues from the increase in mining profits, as well as the reduction in debt servicing bills, I think there is scope to actually now start making inroads into and starting to reduce the public debt to GDP ratio as is being demanded by global financial institutions and international investors. And that can generate a virtuous circle of where investors are more and more willing to buy South African debt, and that can result in further declines in long-term interest rates, and that in turn generates more scope for slightly more expansionary fiscal policy, which in turn results in higher economic growth, which in turn can result in still higher government revenues. And so you have this potential to generate a virtuous circle. But it will all come to naught if the government doesn't translate its intentions to embark upon infrastructural investment spending into actual action. And for that, we need more efficiency in the public service and less criminal syndicate action that scuppers such attempts at infrastructural investment.
You know, Doctor, I'm very glad that you mentioned that, because I was going to go to that point that we're currently hearing that we need huge budgets to fix and also build infrastructure, specifically on the side of the water challenges and others. And I mean, to make it clearer, we're currently sitting at a whopping 78% of debt to GDP, with those debt servicing costs that you've just mentioned elevated at least now 5% of GDP, while economic growth is only projected at 1.5%. So this budget then needs to decisively speak to an effective and realistic blueprint as to how exactly government then plans to address these dwindling growth numbers. Do we even have the resources? What is at stake? Do we have the budget for this at this stage even, Doctor?
I think the message that I'm sending is that we will have more resources available in this budget than we have had at any stage in the past decade, and we need to exploit those for the benefit of the man in the street in terms of improved service delivery. And the key will be not what is contained in the budget, but whether the government of national unity manages to implement what is contained as intentions in the budget. That is the key. Non-implementation has been at the core of South Africa's very low growth rate in the past, as well as, allied weaknesses in the economy, such as inadequate outcomes in education and healthcare, and high levels of crime that have to be addressed.
Doctor, thank you so much. As always, a very meaningful engagement there. That is Dr. Azar, Jammine, Chief Economist at Econometrix, with a preview of the upcoming budget speech.